Welcome back, students. Today we are going to see a new chapter, cash book, chapter 7. So in the previous chapter we have seen subsidiary books. Under the subsidiary books, could have known about the cash and the credit transactions. Only credit transactions will be recorded in the day books. Cash transactions will be recorded in the cash book. So now, cash book is also a subsidiary book. So all the cash transactions will be recorded in a book called cash book. So there are certain points to remember before the preparation of your cash book. So only cash transactions will be recorded in the cash book. Then in case of any credit transactions, it has to be omitted. You have to omit credit transactions. And cash always has debit balance, which means the carried on balance will be on the credit side and the brought on balance will be on the debit side. Previous month's carried on balance will be the brought on balance for the next month. So these are the points to be remembered. Only cash transactions will be recorded in the cash book. And you have to omit credit transactions. So coming back to the chapter, we have the types of cash book. First one is the single column cash book, or call it as simple cash book. So this cash book is a combination of both journal and ledger. So under the single column or the simple cash book, so you will be recording all the receipts on the debit side, payments on the credit side. Receipts on the debit, payments on the credit side. The second type is a double column cash book. So as the name suggests, double means two. So this double column cash book can either be with cash and discount columns, discount allowed on the debit side, discount received on the credit side. And the other type is that you have cash and bank columns without discount. Double means two. Remember that. Then triple column cash book. So you will be having three columns: cash, bank and discount columns. And the fourth category is the petty cash book. Petty means small. So to record all small expenses, you will be maintaining a cash book called as petty cash book. So these are the types of cash book. First, let us see the format of the simple cash book or the single column cash book. So this is the format for single column or the simple cash book. So you will be utilizing both sides, debit and credit. So date, receipt, RN. RN stands for the receipt number. LF, ledger folio, then the amount. Similarly, on the credit side, date, payments, all cash payments will be recorded on the credit side. VN stands for the voucher number, LF for the ledger folio and amount. So this is the format. It is, as I told you, a single column cash book is a combination. All cash books are a combination of journal and ledger. Just imagine your cash ledger. So when you prepare ledger cash account, so you'll be recording all the receipts on the debit side and all the payments on the credit side. We are just going to do the same. So first you have to go through all the transactions. So only cash transaction, any cash receipt or any cash payment alone will be recorded in the cash book. So in case of credit transactions, it has to be omitted. So all the credit transactions will be recorded in the day books, not in cash book. So when we say cash book, only cash transactions are recorded in the cash book. Credit transactions should be omitted. So let us do one exercise problem so that you can understand it better. Let us move on to the first exercise problem. Enter the following transactions in a single column cash book of Sheshadri for May 2017. 1st of May, cash in hand. So this is the brought on balance as on 1st of May. So cash in hand 40,000. Cash received from Swati 4,000. Paid wages in cash 2,000. Purchase goods from Sasikala for cash. It is a cash transaction only. Okay. 6,000. Sold goods for cash 9,000. Purchase computer 15,000. Cash paid to Sabapati 5,000. Paid salary 2,500. Interest received 500. So in this problem, so we have gone through all the transactions. Only cash transactions are there. There is no credit transaction. So now we are going to prepare a simple cash book, single column cash book. So 1st of May, cash in hand. So this is a brought on balance. May 2017, 1st of May. On the receipt side, you are going to start with the brought on balance. To balance brought down. So what is the amount? 40,000. You are starting with 40,000 cash. So this is the cash in hand, 40,000. In 5th of May, cash received from Swati. So we are receiving cash. So it comes on the debit side, receipts. So to Swati. So what is the journal entry for it? Cash is coming in, debit cash, and credit Swati. That is going to be the entry, cash account debtor to Swati's account. So when you are just posting this entry in the cash ledger, how will you do? In cash you will write to Swati. Right? The same thing only we are going to follow here. So all the receipts will be written on the debit side, payments on the credit side. So to Swati 4,000. Then on 7th, paid wages in cash. So May 2017, 7th of May, by wages. So for the credit side you will put by, for the debit side you will put to. So by wages 2,000. Then 10th, purchase goods from Sasikala for cash. So 10th by purchase. What is the amount? 6,000. Then on 15th, sold goods for cash. 15th, to sales. What is the amount? 9,000. Then on 18th, purchase computer. So you are purchasing computer for cash. So 18th, buy computer, 15,000. Then 22nd, cash paid to Sabapati. So we are making a payment by Sabapati. What is the amount? 5,000. Then 28th, paid salary. By salary, 2,500. Then last one, interest received 500. 30th, to interest received. So this side we are getting 53,000. See, 44 plus 9, 53, 53 plus 500, 53, 500. Let us see the total of the credit side. So you have 15 plus 5, 20,000, 28,000, 30,500 is the total here. Whereas on the debit side we are having 53,500, whereas on the credit side we have only 30,500. So what is the difference? 23,000 is the difference. Right? So on 31st of May, this is the closing balance. By balance carry down, I am just writing this here, 53,500 minus 30,500. So when you put the total, here you are getting 30,500. Actually you are not supposed to write like this. For your reference only I am doing. Okay. 23,000 is the carried on balance. So make both sides equal. 53,500. Now this closing balance for the month of May will be the opening balance for the month of June. So what you have to do, on 1st of June, you will be writing to balance brought down 23,000.